Hello everyone, and welcome back to my channel. This is Cashflowstacey, and I'm back with another hot video. Today we're going to be discussing one of the most debated topics in the investment world, and that's real estate versus stocks. Both of these investments are really good, real estate and stocks, and they both have their pros and cons, and they both can be profitable investments. But which one is better? In this video, I'm going to be comparing these two investment options to help you make an informed decision. So first of all, let's talk about real estate. Real estate involves buying, owning, managing, renting real estate properties with the aim to make a profit. One of the main advantages of owning real estate is the potential for passive income. And you know, we love passive income because passive income allows us to have our freedom back. That's why we love it. And that's why we love real estate. You know, if you really break it down, everyone thinks about, you know, the monthly rental income. But take, a second and think back. What about the daily income that you make? You know, if you got 10, 12, 20 real estate properties out there, that daily income could equate to, $1,000, $3,000 a day. Depends on what you charge for rent and how much you get for each property. So kind of break it down like that, and the numbers become astronomical. Rental properties, they generate that regular rental income, which helps investors build wealth over time. So it is kind of real estate is a long-term investment. It could be slow unless you buying and flipping and things like that to increase the cash flow and increase your velocity of money. But for the most part, it's a slow investment, but it's consistent, and it basically provides you to build wealth and create capital for your company. Now, it does have its setbacks and things like that, and its challenges. It requires, capital up front. It requires you to be hands-on. It requires maintenance. It can be stressful to manage because sometimes tenants don't pay rent and you have to evict them. You got to do repairs. You have all kinds of damages. It has a lot of liability. You got natural disasters. You may have accidents on your property. You may get sued. There's just a whole ball game of cons out there that, and the biggest one is the housing market. Your price, the value of your property is based upon what the housing market is doing. If you flip back to 2008, 2009, when you had properties at their all-time high, and then all of a sudden you have a property that's worth $100,000 and now worth $60,000. Your value of your portfolio went down 40%, just like that, based upon a market. The house itself didn't change. The bricks stayed the same. The electrical stayed the same. Your rent stayed the same, but the market basically determined the price of your house. Like now, if you, for instance, you bought a house, parents' house, it probably was $50,000. That same house today is probably worth $200,000 because the market calls for it. So it has its advantages and it has its disadvantages, but that's my take on the real estate investing. Now, let's jump over to the stock investing. Stock investing involves buying and selling shares of publicly traded companies. Now, you buy these companies, they're publicly traded, and your ultimate gain is to make a profit. One of the main advantages of stock investing is the liquid. You in the morning, you out at the end of the day. So your money is very liquid, other than like real estate. When you invest in a property, it takes time to get your money out. Case in point, I bought a property in Savannah. You got your money tied up in the property. In order to get it out, you got to refinance to get your money out. You got to do a cash out. That requires an appraiser. That requires a mortgage. That requires points on the mortgage loan. That requires all kind of junk fees in the title search. You got your loan officer fees. So it just to get your money out of the real estate property. So stocks are very liquid. You buy, you sell. You buy, you sell. The stock market is very liquid. And here's the thing: it's a market. So basically, whatever the market is willing to pay for that particular stock yesterday may be different today. It may be higher, it may be lower. It just depends on what the market is paying at that particular time. Stocks can be bought and sold quickly, making it easier to access your money when needed. In addition, stocks offer potential for higher returns, as some stocks have grown significantly over time. So if you take Apple, for instance, back in the day when it first came out, Apple was roughly around $5 a share. Now Apple is trading around $145 a share and has been up to, personally, I've seen it up to $600 a share. So it all depends on what the market is doing at that time. And you got to think, the United States stock market is the largest investment institution in the world. And here in 2023, we have access to that. We have access via computers, via trading desks, via trading apps. You can be on your phone and you have access to all of this liquid asset, all of this opportunities available in the stock market. However, stock market does come with its own set of challenges too. The stock market is very volatile. Stock goes up, stock goes down, and there's always a risk of losing money. So you gotta practice, you gotta put in time and attention when it comes to the stock market. However, it's volatile because of a reason. If the stock stays high all the time and never drops, you can never make any money. So if it goes down and never goes up, you can never make any money. So it's volatile for a reason. The stock market is designed to go up and down and up and down. It's your judgment in your, what's the word I'm looking for? It's your opportunity to be on the right side of the up and down. You gotta be cognizant of what's going on in the market at all times once you're in it. And like I said, when you spend time and attention in this market, you will understand it. And that's with anything. Time and attention is so which one is better? Stock market or real estate? It just really depends on your investment goals, which one you think is better. Real estate is a more stable source of income and has potential for long-term appreciation. So, like the tortoise, steady pace wins the race. That's real estate. But if you're looking for higher returns and you try to bang it out real quick, stock market is where you want to be at. However, the risk of the stock market is a lot higher than the real estate market. Is like, driving a car with no brakes. Because once that stock starts to fall, if you cannot get out, you risk the chance of losing your entire portfolio. So you just got to know what you're doing at all times, and that comes with time and attention. That comes with training. My opinion is, I believe that you should have a little mix of both. Why not have some steady income on the real estate side, where you're making that passive income every day, and then you got the stock. A little bit more risk. However, with the stocks, you don't have to deal with the tenants, the toilets, the taxes, the maintenance, or anything like that. You don't have to deal with any repair guys. You're just basically in and out of the market either every day, every month, once a year, or you holding it for a long-term stock to gain the appreciation, or they have all sorts of strategies when it comes to stock. You got dividend investing. That's where you just basically invest in to get a dividend, which is another form of passive income. So I say do both. Do stocks, do real estate, and I think you'll be fine in the end. So to sum it all up, both will produce passive income with the proper training, with the proper knowledge. Definitely do real estate, definitely do stocks, get involved. If you haven't started your business, definitely click the link in the bio so you can start building your business credit. This is Cashflowstacey. I'm done with another video. I'll see you guys next time.